Good evening, everyone, and welcome to our second webinar with Digital Surge, Webinar Wednesdays, where we've done an educational series delivering live webinars every Wednesday. And tonight we're going to be talking about doing your own research, which is very, very important. We're going to talk about the discovery zone. Digital Surge will be coming in, and I'm going to be talking about dollar cost averaging strategies. So first part, so these webinar series are going to be broken down into two parts. So the first 30 minutes is going to be with myself, and we're going to be going through some tips on how to do your own research and dollar cost averaging. And then the second part, I'll be inviting in Christian, who's a partnerships manager for Digital Surge, and he'll be telling you about the Discovery Zone, which is a product that they have created to help their clients understand and do their own research on projects. So, which is very, very important. And that's the whole purpose and the point in today's topic. So that will be the second part where we will bring him in. So overall objectives is getting really kind of clear on what is doing your own research. I remember when I very first got into the crypto space, everybody always said to me, do your own research, do your own research. Warren Buffett says, invest in undervalued companies. How do you determine? How do you do your own research? How do you know it's an undervalued company? How do you research a project? So I found that extremely frustrating when I very first got started because I didn't like I understood what they were saying, but I didn't understand how to do it. Like I didn't know how to go and read about a project and we're going to go through the things that you need to be looking at and then the different types of tools that are available for you. Benefits of dollar cost averaging we'll go into, and then different types of tools that you can use. Now, there's lots of them on the market, and we'll go through a few of those. Just a quick little disclaimer before we jump into the heart of today's presentation. It is for education purposes only. It's not financial advice. We're not recommending that you invest in any of the crypto projects or invest in anything. We're always saying to do your own research, and this content is always being recorded and it is shared in our education hub and our social media channels. So just be aware of that. For those of you that I have not had a chance of meeting yet, just very briefly, who am I? My name is Danielle Marie. I'm the founder of Evolve Her, which is an education and mentorship platform specifically designed to support women transitioning into the crypto and Web3 space. All Things Blockchain is a nonprofit association I founded over November 2020, grassroots community. We host regular educational networking and events globally across the world. And I've been in crypto and blockchain education, teaching at an accredited level for the past 5 years. Enough about me. Webinar Wednesday, so we've got them coming up. We're going strong until June. So if you can keep up, we've got lots of different topics that we're going to be going. We've got our Australian Founders Series. So this is where we bring in a project that's based in Australia. So we have DStore, diving deeper into Nexa and understanding more on a technical level about proof of work and different types of architectures. Blockchain and real estate, and then how to stay safe, which is our next one with Digital Surge, which is obviously super, super important. And I want to be diving way more and deeper and probably even design a specific course for online, and especially with AI and all these deep fakes and all these different scams that are happening. So it's a very, very important topic. So we'll definitely be diving more into that. For those of you that aren't already inside of the Education Hub, this is where we're building out and sharing all of our resources, so the full recordings. We have some short on-demand courses, but we've got more that we're building out and going to be putting in there. So this will continue to grow and develop over time. So if you haven't signed up already, you can go and do that. It's 100% free, and it's also a place for you to connect and The idea is that people will connect and share information inside of there, and it will kind of turn into this peer-to-peer education. So, like, we can provide the platform and put the resources in there, but we need everybody kind of to contribute to make it grow. We are trialing having a WhatsApp community group to try to have a place where people can go and kind of connect, and it's also another place where we share information. So if you haven't signed up for that, please go ahead and do that. We may be moving to another platform, but for now, it's on WhatsApp. All right, please, if you have questions as we go through today's session, please put them in the chat or write them down and we'll come back to it. I am bringing in our guest speaker at 7:30, so most likely we'll just do the Q&A at the very end. But if you put them in the chat as we're going along, I will go back and I'll scroll through them and I'll answer all of the questions, both anybody that has through part one or part two. Okay. And then you also have the community group on WhatsApp and the education hub. If you ask questions in there, we will answer your questions so you can get support. So that's it from the introductions. Let's start with the first part. But before we do that, I see a few people have shared the LinkedIn. That's fantastic for the new people that have just joined. I love for people to share where they're tuning in from. We already have somebody from Hong Kong, Italy, Australia. So if you haven't already, please use the chat. Let us know where you're tuning in from. Use it as an opportunity to connect with other people. Feel free to share your LinkedIn. And let's get started into the first part. All right, welcome to part one, where we're going to jump in and talk about doing your own research and how important it is, and dollar cost averaging fundamentals. For some of you, you may have a good understanding of these topics and it might be a good refresher. For some of you, it's going to be completely new information. So let's dive right into it. So what does DYOR actually mean? What does do your own research mean? As I mentioned previously, this was one of the things that I found really frustrating. I understood the concept, but I didn't really understand how to do my own research and understand these projects. But it was constantly said to me in the beginning, like, do your own research before you invest in any type of product or project. Sorry, not a product. It could be a product as well. But how do you actually go in and independently evaluate an asset or a company? Like, and so you need to learn the skills to be able to go and understand a project before you go and invest in it. Because if you don't learn how to evaluate a project, now this isn't specific to crypto or Web3. Now we're talking about it through the lens of crypto, and it's even probably more important because the crypto space has so many different tokens and so many different projects that there's an abundance of them. So it's really more important to more than ever to understand, like, if you're going to go and invest stocks, buy stocks in like Apple or Tesla or something, maybe you don't need to kind of really go and do understand on a deep level. But these crypto projects, you really need to be understanding what you're investing in. And you need to know where the data is coming from. Is it reliable? Especially if you're using AI. AI is only as good as the data that it's fed. So you have to understand the training model, what data is it being given. And a lot of times, people like just believe influencers or hype, when a lot of the times these people are actually being paid to kind of promote that, and maybe they haven't even actually done their own homework and they haven't dived deep into understanding the project and the core fundamentals, which we're going to go through, and what's really important when you're evaluating a project. So why research matters? There are tons of different tokens on the market. If you go onto CoinMarketCap, there's just an abundance. So you really need to, and now they're listed as kind of like your blue chips. You got your Bitcoin and your Ethereum, and then your blue chips, and then all of the other ones they consider altcoins. They'll consider very kind of like high risk. And there's so many of them. And if somebody, or if you think it's a good project and they're using blockchain and you want to invest in it, but you don't know how to research that project, it's going to be very hard for you to understand if the project is sustainable because not all of them have strong fundamentals. So some of these people just have pipe dreams and they can make a good website and they can use AI to create a whole bunch of marketing materials, but they actually don't have any strong fundamentals. They don't have any maybe cash backing them. They don't have a good team. It's all kind of more just smoke and mirrors. So if you don't do your research to understand their fundamentals, which is a lot of the times, and we're going to get to it in a moment, but their team and their tokenomics, the project probably won't last very long and you'll lose your money. So having research skills and knowing how to use certain tools to be able to help you research and identify risk and look at opportunities and look at business models and like so if you're investing money in a mining pool, for example, like what's the sustainability of that company? A lot of mining companies are going out of business. So how do you do your research to know the health of that company? Is it a public traded company? Is it doing well? Is it performing? So this is the type of research that you need to do to be able to identify the risks and potential opportunities by using research. Now, the more information that we have, and if we think about AI, for example, as I mentioned previously, AI is only as good as the data that it's being trained on, right? So the more data, the more, if you're researching or learning about a particular topic, more data on that particular topic. Is it real data? Where is it, backed by data and science? So where is the data kind of coming from? Well, it's the same thing with humans. We need to understand the projects to be able to make kind of informed decisions so that when we're actually investing in any type of projects, we're not emotionally trading. We're not just kind of doing it based off of hype or gut. We've actually done our research and we know that the project has good fundamentals. So, what are some common mistakes that beginners make? And I've probably made every single one of them. Um, Buying based off of hype or social media, I definitely did that in the early days. I have a bit of a higher risk tolerance. Like I kind of live with that. Don't, invest more than you can afford to lose. Same kind of when I go to the casino. Fear of missing out, I've definitely done that. Just kind of like invested because somebody told me to. I did no research whatsoever, but I just fear I was going to miss out. Influencers. So following influencers, a lot of them are actually paid to promote and market these products. They might not even have done their research, or if they do, they don't care because they're also probably being paid in tokens. So the more they promote the product and or the project, the more that the token goes up, the more that they get paid. So just because an influencer is promoting a particular project, and I'm not saying that this is the case across the board, but a lot of them are paid to promote those products or projects. So you do just have to wonder, just because they're promoting it doesn't necessarily mean that it's a good long-term sustainable business model. And then a lot of the times they invest without having a strategy. They get in, they've got some money, and they just kind of go in blindly. So taking the time to understand and how to do your own research is definitely very important. And when you take the emotion out of it, so I don't crypto trade. I'm not a day trader. I never have been. I'm a hodler. I've dabbled. I've tried to learn how to trade. It's just not me. I think I'm way too emotional for it. But the good traders have good control over their emotions. So maybe that's you. So when you're emotional, you react to price movements, you're, influenced by social media, you're thinking more kind of short term compared to when you have like a very structured investing plan, and you've thought about it, maybe you've gotten some financial advice from somebody and it's research driven, it's long-term focus, it's strategic, maybe it's a diverse portfolio. between, crypto and tech stocks and, commodities, and maybe you have some property. Who knows, whatever that might be for you, right? But it's about having a very kind of structured long-term plan. And when you do that, you kind of don't look at the price. So that's why I'm a hodler. I don't really stress too much when Bitcoin drops down to 60 because I know that it's going to go up again. It sucks for now. It's a very bit of a bear market at the moment, but I'm not too worried about it because I have a long-term plan with my Bitcoin. So, how do you do your own research? This was the topic that frustrated me the most when I got into the crypto space because everyone say, do your own research, do your own research, and I didn't know how to do it. So, I'm hoping that tonight's webinar, and for all of you that are watching the recording, will get value out of this and will save you some time. So we're going to unpack it a little bit further in the next slide, but the first thing that you really want to be doing is going and reviewing their documentation and their website. And then there's certain information that we're going to go and look for, right? But the main thing you really want to be understanding is what problem are they solving? And if they're solving that problem, who else is solving that problem? Because entrepreneurship, whether it's Web3 or Web2 or, whatever industry, they have to be kind of solving a problem and creating and delivering value. Then you really want to be looking at the team, the roadmap, and the community that they either currently have or that they're building or their plan to be able to kind of build that community and execute that roadmap. You really want to be using trusted tools. So we're going to kind of unpack a little bit of some different tools that you can have and like where are you getting that market data to make these kind of informed decisions. So there's different tools that you can use. The discovery zone, which we're going to be going through in part 2 with Digital Surge. Christian will be taking you through that. There's different types of data platforms like CoinGecko, CoinMarketCap. This is where you can go on, you can search for a project, look for its ticker, you can see exchanges that it's on. It will usually have information, links to websites, etc. AI research tools, there are plenty of different AI tools. There is one specific that we are going to be working with, Mirror.ai by GlassLane. They have it where it's specifically for researching crypto. So there are different tools that you can use, which I definitely didn't have when I started. So you guys are much luckier, these AI research tools that you can use to help you doing your research. And in the next slide, I'm going to go through those. What are the things that you need to research? So it's great to use AI, and I was just having this conversation with somebody. AI is a great productivity tool, but it's not perfect. And it also depends on the data that it's been trained on. And it also depends on the questions that you're prompting it and how it's been trained. So it's not a magic bullet, but it definitely helps us with our productivity. So what should we be researching? Okay, great. We understand that we need to do our own research. We come across a project. What exactly am I researching? Well, one, you always want to know the people that are behind the team. You want to go and research them, check out their LinkedIn, their socials. What's their experience? Is it an experienced team? Is it a team of 2 that are doing 5 different roles, or is it a team of 6 and they all come from like previous, established roles, so they come with a lot of experience? Really important to know who behind the team is because the survival of a project is really dependent on the team that you have that and the founders of the project. So it's very, very important to kind of know who is behind the project. The next biggest thing is the tokenomics. Because yes, you need a good team and you need good founders and they need to be solving a good problem and have a good vision and all of that. But the tokenomics are really quite important for the sustainability of the project. How is it going to do and perform over time? Of course, there's a lot of different variables, but TVL, it should be the other way, not TLV. TVL, total value locked. What are the vesting schedules and unlocks? So if there is liquidity locked up, when are those going to be unlocked? When is there going to be vesting schedules for the, seed and pre-seed investors? Is there team allocation? If there is team allocation, when are those vesting schedules up? So it's important to understand the tokenomics to be able to understand the sustainability. Also, what's the current number of tokens that are currently in circulation? So if you don't know how to, read and understand tokenomics, now you're lucky that you have AI to be able to kind of help you. But it's important to learn and understand that because this is one of the kind of key factors as to a project. Then they also have to have a clear roadmap. What are their goals? What are their timelines? Have they been hitting milestones? A lot of this will be dependent based on the founders and like the team. And then also funding. Do they have funding? Are they backed by any VCs? How did they raise their money? Is it credible? Was it through an ICO? Was it through funds? Was it through angel investors? Like, how did they get funding? How much runway do they have? Do they have a good team? Do they have a good roadmap? Are they solving a good problem? Do they have good tokenomics? Like, these are all of the things. It's like if you're baking a cake, you need all of the ingredients to bake the cake. Well, these are all the ingredients that you need to be picking and selecting a good project that you should be investing your hard-earned money from. Then community and adoption. If it's a platform, if they have tokens, is their token a utility token? If it's a utility token, do they have active users? Are they active on socials? Is their community active on socials? If so, is it where? Is it Discord? Is it, Telegram? Are they active on LinkedIn? So these are all the main five categories that you need to be researching for a project. Every time I think that you are trying to do your own research on a project, whether you should be working for them or investing in them or, going to do anything, maybe you're going to partner with them. So this is when this type of research goes hand in hand. Now, there is some more advanced research that you could go a little bit deeper. So that first slide is kind of like the main things that you need to be researching, especially if you're doing it from I might work for this company or I'm looking at investing and speculating and I'm buying some tokens. What consensus mechanism are they using? How are decisions made? What's the governance? Is it a DAO? Is it centralized? What's the level of decentralization? That a lot of times will come down to the consensus mechanism that they're using and their governance structure and how the decisions are. But understanding this is quite important because how the fundamentals, your layer one, your consensus mechanism and your governance and how decisions are made and how decentralized the platform is, contributes to the sustainability of your project because it's actually built on that chain. So there's many chains that are no longer around that people maybe built their projects on that aren't that either they finished those projects or they had to rebuild on another chain because those chains are no longer around. So you need to be thinking about the sustainability of the actual chain that you're building on and how decentralized is that? What consensus mechanisms are they using? Do you have a vote if you're a token holder? Can you participate? If you can participate, how do you participate? Does that impact the decentralization level, or do you need to participate being a node, or by staking, depending on what consensus mechanism it is? So this kind of goes a little bit deeper into the project. Security and audits. What type of security measures do they have? Have their smart contracts been audited? Is this stuff on their website? Is it open source? Do they share their GitHubs? This is, as I mentioned, a bit more advanced. Do your own research, but it's definitely a way that you can go deeper at what is their on-chain activity. So this is definitely more going deeper and understanding things on a little bit more of a technical level, but also very important. So, I would definitely start with the first, and I might even just go back just for it. Oh, I don't know if I can. Yeah. So these are the first five that, I think are definitely a must if you're going to research any type of project. Go on there. Who are the founders? Look at the tokenomics. What's the roadmap? Do they have funding? How are they getting funding? How was it raised? How much did they raise? How much runway do they have? And what kind of users do they have? Is it a utility token? What's their plan to get network effect? These are the criticals. And then you can go a little bit more advanced in understanding the consensus mechanisms and the security audits and the on-chain activity and how you can participate in the governance or the decentralized level within that project. So we're going to talk quickly about dollar cost averaging before we hand over to our part two, but just quickly, I'm not a financial advisor, so just a disclaimer, even though I'm going to be talking about different types of investing strategies and dollar cost averaging, I'm not recommending that you invest. This is purely for educational purposes. It can be quite easy, through reputable exchanges, but really always do your own research and never invest more than you can afford to lose is my number one rule. So there's a couple of different, sorry, let me just let these people in. Um, Sorry, I was trying to let these people in, but it's not, admit all. Okay. Common investing strategies. So you got your daily active trading. We're not going to go through any of that today. I told you I'm not even a trader, so I don't teach about that, but I do work with people that do. Lump sum buy and hold. Okay, so that's where you buy and hold it, and then dollar cost averaging, which we are going to go over in just a moment. So, active trading, as I said, I don't trade. It's where you're frequently buying and selling. It takes a lot of time, experience. I know some people that make great money from trading. I know more people that have lost from it. It really comes down to your personality type. It's a very volatile market. So, if you do want to learn to day trade, just make sure that you have the time to commit to it. You're good at emotional making decision. Like this, none of this is me, and this is why I don't day trade, right? So it takes a lot of discipline to be an active day trader. We are not covering that today, but if that's for you, then we've got some more trading. I work with Nanny Crypto, but that's not the purpose of today's lesson. Lump sum buy and hold. This is where a lot of people sit. They'll just take, oh, I've got $1,000. I'm going to buy $1,000 worth of Bitcoin, and then I'll just wait, right? It can be very effective, especially if you're buying when the market's low. Like right now, if I had extra capital, I would definitely be buying more Bitcoin at the moment. But if you don't time it right, then it can be very difficult to time the bottom. So that's why a lot of people dollar cost average, which we're going to talk about in the moment. A lot of people sometimes too, they'll get in right at the top, it's like when they got in when it was like $120 and then they've rid it all the way down. So we're trying to avoid that. That's why like buying in the bear market is the perfect time, although that's not financial advice. But that's what I would do myself. So large single purchases can increase exposure, but you do have that kind of short-term volatility. So then we've got dollar cost averaging. So this is when you take fixed amounts over a period of time, and I've got an example, and this could be daily, weekly, monthly, however you feel comfortable. It removes the need for trying to time the market. So I've done a lot of dollar cost averaging because it kind of reduces the emotional decision making. When I was buying different bags of different altcoins, I would go in and change it. So, like, say, for example, I would like deposit a certain amount of money, and I'll show you some examples. Say I deposit like $1,000, and I would just go in and change. I'd buy my Bitcoin, my Ethereum, and then whatever, blue chip tokens I was buying that week, I would just go in and change it. And I'm going to show you how easy it is in just a moment. It was very kind of structured, helps me kind of avoid the FUD and the FOMO. I didn't have to kind of look at the market, volatility, and definitely less time management compared to active trading. If you're going to do active trading, it's going to take a lot more. So some of the benefits is it reduces the risks and poorly timing the market, helps you kind of manage the impact of short-term volatility, which we all know the crypto market is highly volatile. So it allows investments to kind of be made gradually. And so I always say to people, you can always start, $25 a week, maybe $50 a week, maybe $100 a week, whatever is comfortable for you. And you can get in there and you can play around. It really removes having to time the market and it can be automated. And when you're using platforms like Digital Search, which I'm going to show you in a moment, they have support there. And it also helps you kind of get kind of consistent investing habits. And you can adjust it at any point, which I'm going to show you just in a moment. So really over time, it helps you reduce kind of risk by spreading the investments over time and not trying to time the market. You can do it yourself, but obviously it requires discipline. You could go in, you could forget your emotions rather than you're doing it on your own. The pros are sometimes, depending on what platforms, these automated services can have a little bit more in fees. If you're actively investing manually, you could be building, active awareness of what you're buying and stuff like that. But I personally go with method two. It's automated. It's what I do. I find it super easy. You just need to make sure that your money is available in the account and that you set it up, which I'm going to show you. But that's one of the pros. It's a one-time setup. You can go in, you can automate it, you can change it, you can update it, you can pause it. And I actually think I've got a slide in just a second. So this is if you haven't played with this, is Bitcoin dollar cost averaging. I put it in here in 2017 when I learned about Bitcoin. If I would have just invested $100 a week in Bitcoin, I'd have like almost 3 Bitcoin by now. So I really wish I did that rather than buying a whole bunch of shitty altcoins. So dollar cost averaging in Bitcoin is probably would have been the better way for me to go. So before I hand it over to Christian from Digital Search, this is just a screenshot of what it looks like inside of the platform. And this is a screenshot that I took ages while back when I was investing in different, if we want to call them altcoins, shit coins, whatever. You can see at the top corner there, you can add reoccurring buying. So you could go in and add a different token. I would go in and turn them on and off. All you need to do is deposit your AUD and then you just kind of set it up and then it's kind of like a set and forget. You can set it up to be weekly, daily, monthly, bi-weekly. You can set it up for whatever amount you want, and whatever token that you want. So it's really, really easy to get set up and kind of just set and forget it. I love dollar cost averaging in times like the bear market because we don't know if we're going to go lower. We could be at the bottom. We don't know we could go lower. So dollar cost averaging kind of takes that out of it. And even if we do go a little bit lower, then you buy a little bit then. So then you kind of like make up for your losses, right? So super easy to get set up. If you are based in Australia, so for all my global friends, I know that we have people in Italy and Hong Kong and everything. I'm sorry. Digital Surge is an Australian-based only exchange, but if you don't have an account with them, you do get $20 free when you KYC your account, so that you can go in and have a little play with setting that up. So as I mentioned before, if you have questions, you can go ahead and put them into the chat, but I am going to hand over to our guest speaker. I believe they are here. I just need to make them a co-host. And then if you have questions for me or as we go through for Christian from Digital Surge, please put them in the chat. And at the very end of his presentation, we will jump in and do a Q&A. So everyone, welcome to part two, where we're going to be going through the Discovery Zone by Digital Surge. And Christian, are you there?
I am indeed. Can you hear me okay?
I can hear you okay, and I can see you. And what I'm going to do is I'm going to stop sharing and I'm going to hand it over to you, and you should be able to share. your screen.
Okay, let's give it a crack. Can you see my screen now?
No, I still see you.
No, not working. Okay, let's try something else. Share, screen two. How about now?
It is doing something now. Yes, I see the digital search platform. Oh, now I see the Discovery Zone. Yeah.
Wonderful. Okay, we got there. Well, thank you very much, Danielle, and hello, everybody. Thank you all for joining us today. As Danielle mentioned, I'm Christian and I'm part of the team at Digital Surge. For those who aren't familiar, we are an Australian cryptocurrency exchange and we've been operating since 2017. Our focus has always been on making crypto accessible and easy to understand for everyday Australians. And today we're going to talk about something we call the Discovery Zone, which is a feature that highlights early stage crypto assets on the Digital Surge platform. The goal of this session is to help you understand what the Discovery Zone is, why it exists, and how you can approach researching emerging crypto projects. Whether you're new to crypto or you've been exploring for a little while, there should be some useful takeaways for everyone. Before we begin, I need to cover an important disclaimer. This webinar is provided for educational purposes only. Nothing discussed today should be considered financial advice or a recommendation to buy or sell any digital asset. Cryptocurrency markets are volatile, particularly when it comes to early stage projects. So always conduct your own research and consider your own personal circumstances before making any investment decisions. With that out of the way, let's take a look at what we're going to cover today. We're going to cover five main things. First, we'll explain what the Discovery Zone is and what type of assets fall into this category. Second, we'll talk about why Digital Surge introduced this classification. Third, we'll look at some common characteristics of early stage crypto assets. And fourth, we'll explore tools and concepts that can help you research crypto projects. Finally, we'll jump in and do a quick walkthrough of our platform, and we'll show you how Discovery Zone assets appear in practice. The Discovery Zone highlights crypto assets that are in early stages of their life cycle. These projects that may still be building technology, developing their ecosystem, or even still growing their community. They haven't yet reached the same level of maturity or adoption as some of the more established cryptocurrencies like Ethereum, Bitcoin. You'll typically see a few different types of projects in the Discovery Zone. The first type is what we call emerging projects. These are blockchain projects that are still actively building their core technology and working to grow real-world adoption. They might have a promising idea and a working product, but they are still in the early stages of proving themselves. The second type involves tokens with developing use cases. These are projects where the technology, utility, or governance model is still maturing. The project might have launched, but the full vision of what it can do is still being built out. Then we have trend-driven assets. This includes things like meme coins, where the value is heavily influenced by market sentiment, social media trends, and community hype rather than underlying technology. These ones can be especially volatile. And finally, you'll see projects exploring innovative technologies. They are often pushing the boundaries of what blockchain technology can do. The key thing to understand is that the Discovery Zone is not a quality rating. It's a classification that helps you identify projects that are in their early stages of their journey. So we created the Discovery Zone for the following reasons. We have over 440 tradable cryptocurrencies on Digital Surge, and new projects are launching all the time. We felt it was important to give users a clear way to distinguish between well-established assets and those that are still early in their journey. Transparency being a big one. In crypto, it's not always obvious which projects are well established and which are still early stage. We wanted to make that distinction clear. When an asset is in the Discovery Zone, you know upfront that it's considered early stage, and you can factor that into your decision making. Education. Crypto is still relatively new industry, and many projects are evolving quickly. We provide resources and articles that helps users better understand emerging projects and how to research them. and support for innovation. So the crypto ecosystem moves very quickly and new technologies are constantly emerging. The Discovery Zone provides a space to explore these innovations within a transparent and supportive framework. So next we're going to talk about what you should understand about early stage assets before you start exploring them. Early stage crypto assets often share a few common characteristics. The first characteristic is high volatility. Early stage assets tend to experience larger price swings than more established cryptocurrencies. You'll often see them go up 20 to 30% a day and then down the same amount. This kind of movement is more common with smaller projects because there are fewer participants in the market and sentiment can shift very quickly. The second characteristic is lower liquidity. When a project has lower trading volume, it means there are fewer buyers and sellers at any given time. In practical terms, this means that if someone places a large buy or sell order, it can move the price more than it would for a higher volume asset. It's worth being aware of this, especially if you're considering larger trades. Third is developing adoption. Many early stage projects are still in the process of building their community, forming partnerships, and growing their ecosystem. This is normal, but it means there's less of a track record to evaluate compared to a project that's been around for many years. And fourth is project uncertainty. This is the reality of early stage projects across any industry, not just crypto. Some projects will grow and succeed, others may not reach their goals, or they may pivot in a different direction. It's a natural part of innovation. The key takeaway here is that none of these characteristics are inherently bad. They're just part of what it means to be early stage. The important thing is that you understand them so you can make informed decisions for yourself. Okay, now we're going to have a quick look at what it looks like on the Digital Surge platform, because you can see here that it's clearly identified with a telescope icon, and that's what we chose for the Discovery Zone. You'll see this icon next to the asset name across the platform, which helps you quickly recognize which assets are classified as early stage. This provides transparency so users can easily identify these assets while browsing. We also provide educational resources that explain key concepts like market capitalization, liquidity, and volatility. These articles are available in the Digital Surge Help Center and is designed to support informed decision making. When researching a crypto project, there are a few key metrics that can help you better understand its characteristics. So for example, market capitalization helps you understand the relative size of a project. Liquidity, often measured through trading volume, helps indicate how actively an asset is traded. Token distribution looks at how tokens are spread across different wallets. Volatility reflects how much an asset's price tends to move over time. And wallet holder metrics can sometimes provide signals about adoption and community growth. A helpful way to think about this is a simple checklist that you can run through in about 60 seconds. Think of it as a first filter, not a final decision. Step 1, check the market cap. Is it a large cap? Is it a well-established project? Step 2, look at the liquidity. Is there enough trading activity that you could buy or sell without a major price impact? Step 3, check the token distribution. Are the tokens spread across many wallets, or is the supply heavily concentrated? You can often find this information through blockchain explorers. Step 4, look at wallet holders. Is the number of people holding the token growing? Is it stable or is it declining? Growth can be a positive signal, while a sharp decline might warrant caution. Step 5, review volatility. Look at the price chart. Have a look at the price over a few different time frames. Has the price been relatively stable or are there large price swings? This helps you understand what kind of price movements to expect. You can apply this checklist to any project, whether it's in the Discovery Zone or elsewhere, and the more you practice, the more natural it becomes. I'm going to switch over to the Digital Surge platform now and walk you through how the Discovery Zone assets appear in practice. This should help bring together everything that I've discussed so far. Okay, I'm going to start off here on the Digital Surge dashboard. So this is what you'll see when you first log into your account. If you've logged into other exchanges, it's very similar where you'll see your total portfolio balance. you'll see how it's been tracking over a time period and a nice pie chart of what you're currently holding in your wallets. Once you scroll down, you have an information section here, which gives you a quick snapshot of what's happening in the market. So starting with top gainers, newly listed coins, which is the coins that we've recently listed from top to bottom. The top traded coins where you are expected to see some of the larger crypto assets and the top losers. And as a quick glance here, you can see which coins have the telescope icon, which indicates that they are within the discovery zone. So we've made it very easy as browsing quickly, you can see. And the same goes for your watch list. You can see it here, or you can also swap your watch list to this view, which people find a little bit easier to navigate. And once you scroll down, you'll see that this coin, Zeus Network, has the telescope icon. So when I click on here, it'll let me know that the Zeus Network is part of the Discovery Zone, and assets in the Discovery Zone are part of emerging and innovative projects that may experience significant price fluctuations. They may not be suitable for all traders. And once you click Learn More, it'll automatically take you over to the Help Center, which you're welcome to explore in your own time. Most of the topics in here I've already discussed briefly. Next, we are going to take a look at the buy sell page. The buy sell page is a full list of all the assets on Digital Surge. Discovery Zone assets appear next to all assets, just like we saw on the dashboard. You'll see here that a lot of these larger cap coins, because we are looking at all the assets from largest cap down to smallest cap, you won't see as many of the coins in here. But once we swap over to, for example, the coin category meme coins, and we swap it to look at ones from lowest market cap at the top, you'll find that all of these projects are classified within our discovery zone. And one of the other reasons that I haven't touched on yet is that coins do get delisted from centralized exchanges quite regularly. And it's never fun when you have been holding a coin for a cycle, maybe longer, and you get an email from your exchange saying that the coin is going to be delisted. So we have been pretty good so far since we've implemented the discovery zone, that if a coin's being delisted, that we already had it in here, which helps users indicate, that the coin may be delisted in the future. It doesn't mean that it's going to be delisted, but it is one way to identify what could happen. Next, you can search for coins in here. So we're going to have a look at a new coin called Canton and see what we can find on the actual asset page itself. So we have the price and we have a price chart, which is trending. You change the time period to see how it's going. And we have the very simple buy and sell modal here on the right. But scrolling down, you can see the market cap, the volume over 24 hours. It's important to note that this volume is the global volume, circulating supply, and its all-time high price, where it's ranked in the market cap. The other thing here that I would like to show you is that once you scroll down, you can learn more about the coin itself, and we have these news articles that pop up. A lot of our users let us know that from here they like to explore more what's happening about that coin specifically. From the coin page, you can easily go over to where it sits in the wallets section. So this is now on the wallets page, and scrolling down, oh, sorry. Yes, so this is where I can send and receive the coins. So if you have your crypto sends enabled, this is where you'll be able to send coins, and then you can also receive coins. So that is my brief walkthrough. I guess if anyone has any questions, we can sort of open up the floor now, and I think Danielle is going to take it from here.
Yeah, definitely. So for people, there is a question, and I have some questions. But if you go ahead and stop sharing your screen, we'll jump into the Q&A. So we'll take the one in the chat first, and anybody else that has any other questions, you can go. They asked, does Digital Surge filter some of the projects before listing on your platform? Are there any criteria for projects to be listed?
Yes, we do have a full listing process. So, how that would work. Sorry, I just got to stop sharing. So yeah, we have a full listing process where we will be checking volumes, where we're going to source liquidity from. Often we will like to have more than one source of liquidity in case one of the exchanges that we are integrated with delist the coin. That helps protect users. Obviously, there's no guarantees. We'll also try and reach out to the projects themselves. Sometimes, a team member might get into the Discord or Telegram to see, how they're communicating with their community because all of those things really matter.
And that kind of leads me into one of my next questions that I had. Obviously, one of the risks with these smaller projects, or as you said, early stage, maybe is a better way of how you guys were wording it. And so there are these startups that are in early stages, just like investing in any new business, right? Like we all know business isn't easy. So, starting a project. So there's a lot of variables that come into, a project, and we talked about some of these things in the first part. Um, but when tokens are getting delisted, and so obviously the token, the more that like the more platforms, I guess, that it's listed on, maybe the less risky it is. But then what are reasons why tokens get delisted, right? So you said that just in a moment, and two-part question, you said that you kind of have different exchanges that you kind of work with to, if one exchange is delisted, it means that you still have liquidity on another exchange that is still trading that token. But what are some of the reasons why tokens get delisted from some exchanges and not others?
Yeah, so we're probably not the best exchange to ask, but a good example would be um, say, for example, in Australia, we are not able to list some privacy tokens. So we are not able to list Monero. We've had coins where we've had to delist them because they no longer fit within the Australian, legislations or laws around which cryptocurrencies were able to have trading. Other times, it may have been listed on another exchange, a global exchange, and there may have been some bad actors that got involved on that exchange itself or just with the governance. Yeah, so coins can get delisted for many different reasons. Out of all the coins that we have delisted, I have seen one project come back from I guess, from the dead. So it's once the coins start getting delisted from exchanges globally, they're
Hmm.
going to have a very hard time because a lot of them have token unlocks where they're selling cryptocurrencies and they need trading volume because they want the price to be high to sell to pay their staff. I mean, the list goes on and on.
Yeah, it definitely makes it difficult getting delisted, but something that people should be aware of when they are, investing in, like you said, these early stage startups. So that takes me to my next question. So great, you've identified in the discovery zone for people to say, okay, this is an early stage startup. So make sure that you kind of go in and do your research, and here's some tools to do your research. And we talked about a whole bunch of other tools in part one that they could use. But how does your team, like, what's the process to determine which projects you feel fit into that early stage? Like, who decides that this is an early stage and this project, for example, isn't an early stage project?
Yeah, so I guess once we thought about how we were going to build this out, we set up essentially a template. So when a coin falls within any of those thresholds, it might be, as I said, not available. There's only one liquidity source available, or the market cap or trading volume is extremely low. Particularly like now at the moment, trading volumes are extremely low globally for cryptocurrencies. So it's very easy to see wild price swings. If you log in every day and look at the top gainers and top losers over 24 hours, it's not uncommon to see coins moving more than 50% within a day. So, um,
Hmm.
yeah, I guess the thresholds is really, and that's our own sort of system that's automated. So we get alerted when a coin needs to be manually reviewed.
So you have like a certain criteria,
Exactly.
basically. It's like a checklist kind of criteria. And then once they go in there, then it kind of goes to, so you have this filtering process and then it kind of goes into the final stage, which is like this final review stage by a human before you give it that kind of stamp of a discovery zone, that little icon that's
That's right. Yeah, it's called our asset classification criteria.
very cool. Well, I think that's a great tool. As I mentioned earlier in part one, to everyone, when I very first started, people always said do your own research, but I understood the concept, but I didn't know how to. I didn't know how to go in understanding tokenomics and some of these white papers and things can be quite technical. And, for somebody that comes from a non-financial, non-tech background, it wasn't an easy concept for me to discover. So I think it's great, all these different tools, and tools such as Digital Surge is creating to help people, identify and then find more educational resources. So thank you so much for that. Last opportunity, if anybody has any questions, nobody else has jumped any in there. So on that note, thank you so much. I hope everybody got some value on how important it is to do your own research. If you're based here in Australia, don't forget, if you create an account with Digital Surge using our link, you get $20. You can go in there, you can play. You could set up some dollar cost averaging. You could play with their discovery zone. For those of you that aren't in Australia, you'll just have to stay tuned. We still hope that you got some value. I know that they have some plans to expand into other regions in the future, but for now, Australia is home. So thank you so much, everybody, for tuning in. We hope that you got value tonight. And next month, we will be talking more about scams, how to identify yourselves, what Digital Surge does to help protect their users, the different mechanisms that they have in place. And so, even if you're not based in Australia, pretty much these are safety mechanisms that should be across any exchange. So, you'll definitely still get value from attending. So, please tune in next month to talk about crypto scams and how to prevent yourself. For now, everyone, have a good evening and we'll see you next time.
Thanks,
Thank you,
Diana.
everyone.
Thanks, everyone. Bye bye.
Bye. Thank you. Thanks, Christian.